Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a look at what we consider to be the tier 1 miners. We're talking about the big four here, you guys, so CleanSpark, CORZ, Riot, and Marathon. These are the heavyweights in terms of the publicly traded Bitcoin mining companies in the world right now, and we wanted to give you guys our thoughts and outlook moving into 2024. Now, before we get into that, please take a second, hit the like button, you guys. It's a huge help to myself, the channel. Anthony loves it, and it's 100% free to do. If we manage to hit 400 likes on this video, we're going to be mailing out some TeraWulf gift boxes or TeraWulf swag as well. In addition to that, you guys, leave a comment in the section below if you're holding any of these big four miners, your thoughts and outlook for the year, including next month's halving. And finally, if you're not currently subscribed to the channel, McNallie Money, feel free to join. We'd love to have you as part of the community. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we've got our resident analyst, Anthony Power, back in the house here. We received a lot of great feedback on a video we did a couple of weeks ago, Anthony, called Tier 2 Miner Comparison or Tier 2 Miner Review. So we followed that up today. We're going to be doing what we consider to be Tier 1. So these are the big four. As I mentioned in the intro, you're looking at CleanSpark, CORZ, Riot, and of course Marathon. Anthony's done us the favor of putting some data together, bringing these tables with him today. So we're really going to be looking at some of the differences, similarities, and outlook of each one of these companies as we move into next month's halving, which is only exactly a month away now, Anthony, and then obviously the remainder of 2024. So thanks so much for being here. Looking forward to this one.
Yeah, it's going to be a good podcast.
Let's get right into it then. So Anthony, I know you've brought kind of a consolidated table, a lot of the same metrics that you put out in your monthly comparison article, but this is now specific to this tier 1 group. I guess the first question for you is, what makes a tier 1 miner?
I think, to be honest with you, the biggest part of that is the hash rate. So when you look at these companies, they're all double digit hash rates. And we articulated for the tier 2, it was a hash rate of sort of above 3 exahash all the way up to sort of like, 10 exahash. This group here, they're all significantly above that, and they're significantly growing above that. So even if you consider the company with the lowest current operational hash rate, which is Riot Platforms, with 12.4, they've got a target to achieve 31.5 exahash by the end of this year. So they're going to grow nearly 200% from where they are today, and they've got a plan to do that, and we can talk about that in a bit more detail.
Great. Yeah, I'm looking forward to this one. We just had the CEO, Adam Sullivan, on from CORZ. We've actually got an invitation to go down to the new Corsicana facility, obviously of Riot's there. That's going to be a phenomenal trip, Anthony. And these are generally the big stocks that a lot of people hold in their portfolio. There's a lot of comments, a lot of questions about. So let's get right into it, Anthony. Where should we start on the table here?
Well, I always like to use the enterprise value, and the reason for that is that, market capitalization is one way of looking at evaluation of a company, but what the enterprise value does, it also considers the amount of debt on the balance sheet, the amount of cash and cash equivalents. And, with respect to a couple of these mining stocks, they have got debt on the balance sheet. So we know CORZ just emerged from Chapter 11 in January. And, with that comes, a significant amount of debt. So we've basically, to calculate the enterprise value, you take the market capitalization, you add the debt that's on the balance sheet, and you reduce by the amount of cash and cash equivalents. And in the cash and cash equivalents, I've also included the Bitcoin HODL. Because it is it's a treasury item that you can liquidate in a moment's notice. So I've included that in that enterprise value as well. So if you look at CORZ Scientific's enterprise value is just over $1 billion. And then you go to the other spectrum, you've got Marathon Digital, which has got a market capitalization of over $6 billion last time I looked, but an enterprise value of $4.7 billion. And so, when you look at enterprise value, you're then able to sort of do some comparisons between companies in terms of, when you're buying a company, what are you actually paying for? And an enterprise value is a better metric to use than market capitalization when you're doing that.
Perfect. And yeah, quite a spread here. I'm glad you explained that because a lot of people do use market cap, but in this type of industry where debt is so important and there's such a disparity, some companies have no debt, some companies have a lot. It's good to factor that into the calculation. Now, we talked about exahash and some of the future growth. I'd love to get your comments there as well, Anthony. This group is really setting the pace. I think you said in an earlier podcast, we used to hear targets of 1 exahash, 3, 5, 10. Now some of these companies are coming out saying, hey, we're going for 40, 50, 60, 100. The numbers are getting astronomical as we see that global hash rate going up. And you always say, Anthony, these miners aren't competing against each other. They're competing against that global hash rate. What are your thoughts on the growth from this group? Are you surprised at the numbers we're starting to see?
Well, it was a case of as soon as one company announced big growth, and Riot did that when they announced that enormous order. And on top of that enormous order, they announced an extra, an order as an option to buy at the same price. That sort of like started a domino effect with regards to some of these bigger miners and some of the tier 2 miners as well. We've talked about, Iron and Bitfarms also joining that sort of like that group and expanding and growing hash rate this year. But one thing just to play caution is, it's all right quoting what your hash rate is expected to be at the end of the year. It's another thing to actually achieve it. So if we go back to 2022, only one miner actually achieved their growth strategy during that year, and that was Core Scientific. They actually slightly overachieved their target, which I think was about 6 exahash by the end of the year. However, in 2023, they came out initially with a target of 20 exahash to get by the end of the year. That was quickly brought down to 16 by the end of the year. And then sort of during the year, they then announced that actually it wasn't going to be 16 by the end of the year. They achieved 10. And within about sort of 7 or 8 weeks of the start of 2024, they've got to 16 exahash. So, saying you can get to these numbers is one thing. Achieving it is a whole different ball game. And but what you have to look at is the way that some of these companies have approached, the way they're going to do that in terms of buying the machines and buying significant amounts of machines. So we know that the likes of, Riot platforms, Marathon Digital, CleanSpark have made some significant orders. We know that Core Scientific are making orders as well. And Adam alluded to in the podcast the other day that they were looking to expand one of their facilities, I think by about 75 megawatts this year, and there's a further 300 megawatts for another site that probably maybe next year. So they're growing. We don't quite know the hash rate growth. So I've given them a future hash rate target of 20. That might be giving them a little bit of disservice, but it's going to be sort of maybe 20 to 25. In 24, and then maybe obviously get close to 30 in 2025 at the moment as things stand. But the others are quite categorically, they've stipulated where they're going to be this year and where they're going to be in 2025, and those numbers, significantly increase. So, CleanSpark are looking to get to 50 by the end of 2025, Marathon also 50 by the end of 2025, and Riot, they're just going, all guns for leather here, and they're, going to get significantly higher than 50 if all things happen. One thing about Riot is they've got the Corsicana site, which is a 1 gigawatt facility. That's due to come online literally in a few weeks' time, energized by the end of Q1, we were told. And so we've seen the update, the photographs, the immersion cooling facility being brought to life there. And so, they've got a 1 gigawatt facility in a similar way that Iron have the Childress site where they can grow substantially. Riot are also in that position there. Some of the other miners will have to start looking at whether to expand certain facilities or buy new facilities. We know that CleanSpark, they've articulated that, they've bought the miners, and as they're buying the miners, their team there are sat around discussing now strategies to get those miners put into facilities, and we'll start seeing plans for that to occur throughout this year to try and get to that 32 by the end of the year. Marathon, well, we've seen them, as we've said many times in the last few podcasts, they've done a 180-degree turnaround on their asset light strategy, now looking at acquiring more and more facilities. The third facility was purchased recently from Applied Digital, and that takes them up to sort of like 55% of their hashing power once those facilities have been handed over for the infrastructure that they will own and control, and that might well give them extra capacity to get to 35. For them, it's not as big a reach. So they're at 28.7 at the moment. Of all the miners on here, that's probably likely to be the most achievable this year. It should be. If they don't get to 35, there'll be certainly questions asked, because it's not a massive stretch from, probably about 20% from where they are at the moment. And we've seen that they can grow quite quickly. They had a very poor 2022 with a lot of miners sat in garages for, the best part of 12 months, waiting for facilities to be built. 2023 was an improvement. They got that 23 magic number during the year, and now they're at 28.7. So I expect them to get to 35. They've got another 15 exahash to go in 2025, so they've outlined that there. And I'm assuming with the amount of cash and Bitcoin on the balance sheet, which currently totals around about $1.5 billion, they're in a position where they can make some purchases should the opportunity arise once the halving occurs. And we know that the rewards cut by 50% at that point in time, in less than 5 weeks' time.
Yeah, no, I'm excited to get you talk about growth, Anthony, and some of these facilities. 1 gigawatt facility is just absolutely massive. I'm gonna have to get down there. We'll kick the tires on that one, Anthony. Hopefully we can get some of those hard hats, the Riot hard hats from Jason if he's watching this. I want to get into some of the efficiency metrics next, but before we do, Anthony, now that we've got enterprise value, we've got hash rate, and we've got future hash rate, that allows you to calculate 2 really cool metrics. Number 1 being value per terahash and value per terahash based on future hash rate. So I would be curious to hear your thoughts here. There's quite a spread. We've really got Core Scientific obviously on the low end of the spectrum. And then from there, we've got CleanSpark upwards of $226 per terahash in terms of value. So maybe give us a little bit of an explanation here. What are you seeing? What stands out? And how do they kind of look in comparison?
So this metric is taking the amount of value in the company, and that's the enterprise value. And for Core Scientific and Riot, the enterprise value is based on their self-mining business. And we know what the percentages are because it's quite easily articulated in the accounts there. And then looking at the hash rate that they actually have energized at the moment to come up with what sort of like a value. Now, in this term, valuation is effectively like cost. So it's, what is the value of each of their terahashes that they have energized at the moment. So looking at the likes of Core Scientific, $55 is really, really good value. Then you compare that and you articulated CleanSpark at 226. Well, bear in mind, 6 months ago, CleanSpark had a market capitalization of less than $1 billion. They've now increased that fivefold to effectively $4 billion, and so they've seen a significant rise in their value from an enterprise and a market capitalization. And that growth in value has far exceeded the growth in their hash rate. So when you look at, the hash rate that they've got energized at the moment and look at that as a value, taking into account the enterprise value, that's coming out at 226. So, in simplistic terms, there is more value in the Core Scientific current in the company at the moment compared to CleanSpark using that metric. And please don't start using one metric in isolation. This is one metric. There are lots more metrics to cover, but it's a real value indicating metric. So there is a little bit more than just looking at market capitalization and enterprise value. This takes it to another level. And then we look at the likes of Marathon Digital, and we've seen the Marathon Digital share price drop in recent weeks since the start of the year, unlike CleanSpark, which is up about 80% from the start of the year, and Riot's share price also dropped. That's gave them a little bit more value to their hash rate, and so we see Marathon at 165 currently, and Riot at 105. And then I've looked at what the total future hash rate for the end of this year is to try and see, if that's built into their price at the moment, then this is what the value of that future hash rate looks like. So in terms of Core Scientific, because I only give them a factor of going up one more exahash, I might be doing a little bit of disservice there. That comes out at 52. But here, this is where Riot start coming into their own. If they can achieve that 31.5, and that's factored into their current price, that makes them a real value play in terms of, a mining stock compared to the other three then. And they're coming out at $41. And if we just sort of like, if we look to do a comparison with some of the tier 2 miners, if we look at, say, the likes of Iron and Bitfarms, from a current hash rate, Iron comes out at $63 and Bitfarm comes out at $103. But when you go to future hash rate for those two, so both are looking to achieve 20 and 21 exahash respectively, Iron's value in terms of value per terahash is $22 and Bitfarms is $32. So that gives you, an indication, that there are some value plays in that mid-tier bracket as well.
Yeah, very interesting, very good metric, Anthony. But again, you guys, this is a single metric. Keep in mind, a lot of the companies that we're talking about, Riot, for example, those are the ones that have the biggest amount of hash rate growth this year. So there's a lot of operational executional risk in actually bringing that to fruition, which is why maybe the market's discounted it a little bit. The other thing I wanted to just mention here, Anthony, in your monthly tables, you do a really cool analysis of revenue per petahash. And normally that's coming in around $2,000, $2,200, kind of on the upper end. So this is a cost per terahash, 1,000 terahash in each petahash. So another way to look at this, you guys, in the case of Core Scientific, is one petahash would cost about $55,000 and say it's producing about $1,800 or $2,000 or $2,200 a month. So am I thinking about that right, Anthony?
Yeah. Absolutely.
Okay, as you were going through that, I was trying to think, okay, if it costs this much, what's the revenue it's generating, and kind of going through that. So a really interesting metric, you guys. This one is great to see, especially in light of some of the big moves we've seen this week from companies like TeraWulf or Iron. Perhaps people are picking up on this metric, right? Now, Anthony, the next ones, there's production in here, and then we get into some efficiency. These are the metrics I love the most, you guys, because there's so much importance in this space put on the efficiency of the fleet because of the cost of the energy that goes into these machines, right? It's number one cost for these miners, far and away from anything else. So, Anthony, let's touch on production, then we'll get into the efficiency.
Yeah, so, if you look at the total current energized hash rate, Marathon is a significantly bigger. In fact, Marathon are effectively the size of CleanSpark and Riot added together. But if you look at production for February, all three miners were out mined by Core Scientific, who mined 893. Now, Core Scientific, if we go back just over 12 months ago, were the biggest miner. Before they were admitted to Chapter 11, they were the biggest miner out there. For the last 3 years, they've mined, I think, close to 35,000 Bitcoin. That's about 12,000 more than the next miner on the list. And we saw in January, one thing you can say about Core Scientific, they're consistently producing what they should be month by month. They're never at the top of the table by production by Bitcoin, and they're nowhere near the bottom either. So they're in that sort of that mid-tier. They only give one hash rate, which only a couple of the miners actually do that. Some of the miners, or most of the miners now using what we call operational hash rate, and we'll come on to that with Marathon in a second. But they just use one hash rate, and in a similar way to what Jason said at Riot, they're like just putting their one hash rate out there, want to be judged on that. And so, they had the highest amount of Bitcoin mined in February.
And Anthony, for the record, you guys, I'm going to come out and say I really like that approach. Anthony, I'd be curious to hear your thoughts, but there can be some gamesmanship when you have a overall hash rate and operational. So I do like the theory, you guys, of, hey, if it's in your possession, consider it hash rate, count it, and if it's offline for whatever reason, that's your problem, really. But what's your thought, Anthony?
No, it's a good point, and actually, the other thing I will say is they can have as much fun with the operational hash rate, but the utilization hash rate catches them all out then. So, it's, you can turn around and say, if I've got 10 exahash, but I only had 9 plugged in because I was curtailing or I was doing software upgrades. When it gets to utilization, the 10 is the one that we look at because that's the amount that you had the ability to mine, and it's irrelevant how much you got plugged in. So you'll always be looking at that from a production from your total hash rate in possession.
Okay, so, good point. Yeah,
it's a good point, and but I've had discussions with a number of the chief mining officers. They're in favour of of having the operational hash rates, and one of those miners don't use the operation. I think the other one does. So they were both in favour, and so at the moment it stays in there. So Core Scientific mine the most with 893. Then Marathon, they highlighted their issues with a couple of their sites not having the power energized. And so what you'll see here is even though they came behind Core Scientific, because they highlighted the fact that they had an operational hash rate significantly lower than their total hash rate, they were able to sort of effectively benefit from the Bitcoin per exahash. And of the 4 miners here, they actually came out sort of like top. Now, I'm sure Jason at Riot Platforms will feel a little bit aggrieved because, they had a challenging performance in February, but don't get any credit because they just put their whole hash rate. I mean, if you look at the utilization, you can see straight away they've come top of the Bitcoin per exahash, but Marathon have come bottom of the utilization in the same breath. So, utilization is a really, really good indicator of how you're performing as a miner. And CleanSpark at 95%, well, they've been quoting in previous months 99%. It wasn't as high in February, and that may be because they were actually adding hash rate significantly during the month of February, so maybe not being able to get the full advantage of that. And they did put in an operational hash rate which was about, I think it was 13.8 if I remember rightly. So they weren't quoting 16 as their full hash rate because they only achieved 16 at a point in time in February. So their operational hash rate was lower than that, but still achieving 95%. And then you've got Core Scientific, who are probably achieving over 90% every month of the year. So, like I say, they don't finish as high as Bitfarms or Hive Digital, and they don't finish as low down the list as, say, Marathon and Riot. But, they're a very, very steady miner producing 91%. That's another good metric that we look at.
Yeah, a lot to digest here. I'm looking at the table as we talk through. Now, there's a number of other metrics in here. HODL is another one I would like to quickly talk on. This one, Anthony, to me is just a head scratcher. We have polar opposite opinions of literally we are not holding any Bitcoin. We're selling it daily. In the case of Iron, Dan Roberts has come on the channel and said we feel it's a disservice to shareholders to have Bitcoin on our balance sheet. And lo and behold, again, yesterday or 2 days ago, the share price up 35% in a single day. So there's definitely appetite for that. On the other end of the spectrum, we've got MicroStrategy. They don't even mine Bitcoin. They just have a HODL, and they're outperforming a lot of the Bitcoin miners. So it seems I guess jury is out on this one, Anthony. I'm not sure which is the right approach, but what are you seeing in terms of tier 1 HODL positions?
I mean, you've got 3 of these miners with 3 of the largest HODLs. The only miner you could add to this group here would be Hut 8 Corporation, with about 9,000 Bitcoin, just over 9,000. I mean, CleanSpark have literally grown that 4,000 in the last sort of 7 or 8 months. Really, they've really been drumming down and not selling, only selling a minute amount each month, and so they've got to that very quickly. And they believe, and I've heard Matt state that they think the Bitcoin price is due to continue its rise, and they'll benefit for that. And actually, CleanSpark in the last bull market in 2021 was selling on a daily basis like Iron were, and so they took advantage of those sales because a lot of miners didn't sell in that 2021 bull phase, and even some of the miners were actually buying Bitcoin and then ended up selling that Bitcoin they bought for like less than they bought it for. So not only were they losing the opportunity to sell when price was high, they were buying and then selling the same Bitcoin and making even more losses. So It's a real challenge. I mean, you're quite right. Iron and TeraWulf, and there's a few other miners, literally just sell their Bitcoin on a daily basis and use that for operational and capital, capital growth. But to grow the numbers that we're talking about now, so where you see these companies with, really good HODL positions, so CleanSpark, Marathon, Riot, they are diluting the shares through their ATM facilities significantly to raise cash to pay for everything. Because if you're not selling your Bitcoin, you've got to find the money to cover your operational and your capital growth. And when you look at that line there that says future hash rate by the end of 2024, you can look at how much growth these companies are going through, and how much it's going to cost them. And we had Sam on the podcast yesterday, and he was articulating about their growth and how much it was going to cost them. And we talked about Marathon's recent purchase of their facilities, and they're paying something like $450,000 per megawatt for sites. And so, if you look at how much megawatts is required to get to those hash rates, that's a significant amount of money. And so, shareholders will realize every quarter that, a lot of the companies now are having to use the ATM. I mean, debt is a non-starter now. The debt market is not a good place to be, and we found that out in 2022. So unless that becomes, the rates come down and lenders understand about what they're lending and what they're having as collateral, I'm afraid you've only got two effective levers to raise capital. One of that is to sell Bitcoin, or the other one is to use an ATM. So those three companies have used the ATM significantly. Core Scientific haven't, for obvious reasons, coming out of Chapter 11. They have a number of hurdles to get through. But we had Adam on the podcast, and he articulated how things are going to be able to turn around that company. They've got a really effective plan of how to reduce the debt there, and they've issued some warrants. And if those warrants reach certain price levels, that brings in more revenues to cover debt and to give them some cash runway to grow. So don't for 1 minute keep Core Scientific out of the picture. They're firmly in this group here. Although you look at the enterprise value and think they weren't in the group. But HODL in a bull cycle is everyone wants to have a HODL, but it's when it turns and you're then left with a depreciating asset during a bear cycle, like we found in 2022, it can be a challenge.
Well, and that's exactly it, right? Everyone knows buy low, sell high, but even some of these top Bitcoin companies got caught with their pants down, buying high, selling low, because of that big black swan event, I guess, with the China ban on mining. So you never know when a bull or bear market can turn, and you get caught with either a HODL or no HODL. I wanted to add in there, Anthony, it's not that Core Scientific doesn't believe in Bitcoin or a HODL strategy. As part of their Chapter 11, Adam actually explained to us that they're required to sell their Bitcoin not daily anymore, but within a certain time period, as part of that debt repayment program. So once they get the debt cleared up, which they talked about in the interview, that strategy may look a little bit different, but just to throw it in there. Now, the next one, fleet efficiency. We throw the number 35 around a lot on the channel as kind of the average in the world or among the miners. In this group, you're going to notice quite a bit better, in the mid 20s for most of the pack. And keep in mind, every one of these new machines they're plugging in is bringing that number down or making the fleet more efficient. It's kind of the inverse. Talk to us about fleet efficiency, Anthony. I'm actually quite surprised by the group here. They're in better shape than I thought for the halving.
Yeah, this is, I mean, you could look at the sort of like probably the top four miners from an efficiency perspective. I don't think other miners are at this level at the moment. And that's probably because of the sheer size. They've got, the significant amounts of capital that they've purchased new machines to get to these levels. I mean, it's just over 2 years ago, CleanSpark were at 2 exahash. Now they're at 16. They've bought new machines to get to 16. Marathon have gone from 3 or 4 exahash a couple of years ago. They're at 28 now. So that again, and Riot equally were able to benefit for both those Riot and Marathon being the first two companies listed on the NASDAQ, and had all that opportunity of the influx of institutional capital into their companies to start really buying out. And if you look at Riot's fleet efficiency now of 27.7, by the end of the year, that's probably effectively going to be closer to 21 because they're bringing in significant amounts of micro BT, highly efficient machines. And what does for efficiency? What does that mean to an investor? I mean, at the end of the day, these companies are mining Bitcoin, so they're using energy. So if you have a more efficient machine to mine Bitcoin, it means it's saving you cost. And believe you me, we talk about machine costs, we talk about infrastructure costs. There is no cost like energy costs for these mining companies. It's a significant cost. So if you've got a more efficient machine able to mine, it's saving you money. And with some of these latest machines, we had Ben on the podcast and he was articulating about the T21. They ran some tests on there. He was getting like 20-30% higher performance from these machines without affecting the efficiency of the machine. So, that's like a double edged sword there. You're saving costs, but you're able to do more mining of Bitcoin because you have more hash rate per machine than the actual box states that the machine's supposed to have. So that was really positive to hear that from Ben. And we did hear that a couple of years ago when some of the latest machines were coming out and people were talking about putting these machines in immersion cooling, and it would increase the ability to run the machines harder because you were able to dissipate the heat. These machines give off a lot of heat and therefore have to be cooled or kept cool. By having them in immersion cooling, you're taking away that element there, so you can run them 24/7 with a higher. But now we're seeing these latest machines like the T21, the S21, where we're seeing significantly more efficiency from those. And we've talked about going into the halving. There's three things that these miners need to have. They need to have access to cheap energy. And these four miners here do have access to cheap energy. Second thing is they need access to more efficient machines. And we're seeing that the growth that these miners are coming out with now to get to their target hash rates, they're buying the most efficient machines on the market. That will keep the cost down as well. And then the third thing is having a cash runway. And actually, even with Core Scientific just coming out of Chapter 11, they've got cash on the balance sheet at the moment, significant. I think it's in excess of 50 million. And the others have got significant, Marathon and Riot have probably got $500 million in cash on their balance sheet. And then you can start talking about the HODL positions that each of them have, which in terms of Marathon, at today's price, that's $1 billion in Bitcoin on the balance sheet. And Riot about $500 million. So Marathon and Riot have probably got about $1 billion to $1.5 billion in treasury, able to sort of to strengthen again, to buy efficiency. But yeah, this is like effectively it could be like a runaway group here. We've talked about others getting to 20, but by the time they get to 20, some of these have got to 30. And so what happens in 2025? Does that gap get even bigger? So, we talked about a divide between, say, 7 or 8 miners. These four could potentially, leave the rest standing, especially if the share price for Core Scientific increases and they're able to do some of the things that they said they can do once targets are reached. It puts them into a really position they can get rid of some of that debt there very quickly. And they've got a staggered payment structure for debt, so they don't pay off a lot of debt in the early years. I think 2029 is where some significant amounts of debt. Well, that hopefully by that point in time they've run through some of the scenarios where they can look to reduce it. If the Bitcoin price is favorable, they can reduce it that way. But it's very optimistic for these four miners, especially.
It sure is. And I actually wanted to, we'll bring up debt quickly. I know we talked about it in terms of enterprise value. You've really got two in the pack. So you've got CleanSpark and Riot with virtually no debt, very minimal. You've got Core Scientific with a fair amount. However, as you mentioned, that first round or first tranche of warrants, the way they've set that up, once they meet that milestone price, I think it was the low sixes, depending how many people convert those warrants, that should more or less take care of their debt load. And interestingly enough, I learned in that conversation, there's companies that actively go out and buy warrants that are in the money. So that was a good question you asked, Anthony, about what will be the uptake versus expected. So a cool thought there. The other thing, Marathon, they've got debt on the books, but they've got enough cash and cash equivalents to cover it. So obviously they're not too worried about that debt at this point in time. So maybe we'll skip that one, Anthony, but I did want to spend some time on the next two. Mining margin, very healthy margins, getting better by the day almost as Bitcoin's going up. And then we hear a lot of talk on the channel, Anthony, about executive compensation, stock compensation. So you put in a cool metric at the end, basically looking at revenue versus stock compensation, and a nice spread between the group, kind of between the 8 to 13% range. So I'll kick it back to you. We can cover those two and then we'll wrap her up.
Yeah, so this is the gross margin from the last quarter of 2023. So, if you look at the Bitcoin price now, some of these margins will be even better than they were then, because the Bitcoin price has increased by about 58% since the year to date. So that would improve all those margin positions. But actually, if you look at the margins that they were achieving in the last quarter, very, very healthy. All above 50%. Bear in mind, Marathon's achieving 52%, also having to pay a hosting fee as part of that margin. It doesn't include operational costs, so the operational costs will be things like staffing costs, G&A costs, so professional fees, legal fees, travel subsistence, marketing, and also operating interest if they are paying interest on loans. And two of these companies have got significant debt, so they are paying, albeit Marathon's note is only something like, I think it's like 1% or maybe even less than that, but it's not a significant amount. They did sort of like reduce, I think it was originally close to 750 million. They reduced over 400 million last year, but they did it at a time when the share price was really low. So, and they swapped the debt for shares, and the debt price a month later surged, and I was sort of scratching my head as to why you would release that amount of debt when the interest payments were, quite significant. I mean, 7.5 million of interest a year on a $750 million loan. And then we've got TeraWulf, who announced the other day their 2023. They only had a 120 million debt, and yet the payments were 19 million for that. For something. So it did make me wonder why they were releasing that. It didn't have to be released for another couple of years. So we'll hopefully get Fred to answer that sometime in the future. But yeah, gross margins all very positive there, probably significantly higher. We know that Riot Platforms actually 63%. It actually came down from the previous quarter. So if you think about their sort of like third quarter in 2023, them summer months, so that the July, August, September, they were receiving significant amounts of energy credits, demand response credits and power sales that they were able to then reduce their energy cost with, and they had a gross margin in excess of 100% for that quarter. So it's come down to 63, still very healthy when you compare to these here. And the only two miners that can compete from a gross margin perspective would be Cipher and would be TeraWulf, both probably in the low 60s. But going forward with the Bitcoin price, that those all four of those and all the mining margins will be significantly high, because that rise in Bitcoin price will help everybody. Stock compensation, I just put this in really because I don't include it as a cost in my analysis, but it is an important cost because effectively this is it's a dilution of shares. It's interesting to understand how some of the companies are setting their performance targets to earn these this additional stock that they receive, and that takes some time to scratch my head. But I just thought I'd put the percentages there. I did analysis on the sort of like the three of the biggest companies in the world, so the Amazons, I think Apple and Microsoft, and their stock compensation for them companies was coming around about 7%. So it just as an indicator, all four companies here are significantly higher than that. Not necessarily if the performance isn't achieved, then they don't get all the stock compensation. So this is basically effectively like where they're putting their marker in the sand to say that if they achieve, this is the stock compensation. But they have to. There'll be certain criteria that the company has to meet. It could be EBITDA, it could be increased hash rate, it could be whether the sun's shining. I don't know. In some instances, and you think, when you look at some of the amount of shares that have been issued, the sun was shining that day, definitely.
What's interesting there, Anthony, is we've heard through our interviews, some of them are actually based on market cap milestone achievements of the company. However, then you throw ATMs into the mix. Again, it kind of muddies the water a little bit, right? Is the company growing organically, or are you just issuing more shares to increase the market cap? Again, we'll leave that for another discussion. You guys draw your own conclusions.
I mean, for me, it should be linked to shareholder, wealth as well. So if the share price is increasing, that way the shareholders are benefiting at the same time as the company. Because at the end of the day, let's remember, these companies wouldn't be anything without the shareholders. It's shareholder capital. These companies haven't gone in and purchased. I don't see any of the CEOs of these companies buying significant amounts of shares in their own right, and yet they all own significant amounts of shares since they've been in the roles. So it's the shareholders who've put them where they are. Yes, they're running the companies, but they're running the companies that supposedly in the interest of shareholders. So I would have it some related to some sort of shareholder performance as well. So if the shareholders are benefiting by a good share price, then of course let the senior management team also benefit. But you're right there to articulate. If it's about market capitalization, and if you issue and some of these companies issue significant amounts of. I mean, CleanSpark effectively sold the company 3 times in the last 15 months in terms of where they were and how many shares they've sold. And yes, they're at 16 exahash, and the company was at 2 exahash just 2 years ago. So they can argue that there, but is the share price reflective of that at the moment? And is it reflective for that amount of stock compensation? That's a question we can do in another podcast.
We sure can. And again, you guys, we understand this is a growth tech industry. There's going to be higher multiples here, and I'm all for pay for performance, like Anthony said. We've covered a lot of ground in today's video, Anthony. Very good discussion. I know I learned a lot here, especially in relation to some of these new metrics you've added. I'll throw it back to you for any closing thoughts, but appreciate the work that went into this.
Yeah, I think you've got with the growth here, if these companies can achieve this growth, and we see the Bitcoin price with all this funding going through to the ETF funds on a daily basis, this will help the mining. This will help the miners, and then what will happen then is, because the margins will increase, the profits will increase. You'll get retail investors coming back to this area. You'll get institutional investors coming back to this area. At the end of the day, there might be some cyclical worries about the price of Bitcoin. There might be some, obviously issues around raising capital. And we know that, these companies, even some of the smaller companies have got, at the market offerings, significantly higher than the value of the companies at the moment. So, it might put some institutional investment off there. But if they can get to these hash rates and, keep their percentage of the global network and achieve those rewards associated, then there's a good future for these miners.
There certainly is. We'd love to hear your thoughts in the comment section below. Which of the 4 is your favorite and why? You guys, if you're still watching the video at this point, hopefully you found some value. Hit the like button. It's free to do. It helps us out. It pushes this content to other people who may find value. If you're not already subscribed to the channel, McNallie Money, feel free to join. That's all for now. We'll see you next week.